Hello everyone, my name is Elizabeth and I am your property and casualty guide. What if I told you that dropping out of school at 15 led me to earning a degree at 50 and my North Carolina property and casualty license at 61? I have faced test anxiety, stumbled through failures, and celebrated hard-won successes. If you feel the odds are against you, let me show you how to pass your exam on the first try. And if this isn't your first try, then welcome to the journey of mastery, because this time you're coming back stronger. I'll walk you through a proven process for learning and exam prep by focusing on 3 key steps: defining the terms, examples of the terms, and state exam scenarios. You'll not only understand the material, but you'll gain the confidence to use it. This approach isn't just about memorizing, it's about mastery and building your confidence. Studies show that applying knowledge like this improves retention, it boosts your confidence, and leads to success, even if you struggled before. Use this video as a tool to guide you on how to target the areas where you need to strengthen your understanding. Come on now, join me, take notes, and don't stop until you've nailed it. All right, our first lively and relatable terms are A through D. To solidify your knowledge, be prepared to take notes or listen to this video over and over until you're sick of it. That way you will know it so well, you will not be caught off guard on your exam. Our first term is adverse selection. Adverse selection occurs when high-risk individuals are more likely to purchase insurance, leading to imbalances in the pool of policyholders. For example, if a skydiving enthusiast buys life insurance and avoids sharing their hobby, this is a classic example of adverse selection. Assigned risk. Assigned risk refers to drivers who can't get auto insurance due to their driving history. State programs assign them to insurers who must provide coverage. Think of a teenager with 6 speeding tickets. No insurer is thrilled to cover them, but the state ensures their assigned coverage so they can legally drive. Avoidance. Avoidance means completely eliminating a risk by not engaging in risky behavior. You decide not to own a trampoline because you know your neighbor's kids would love jumping on it. Builder's risk coverage, a type of property insurance covering damages to a building under construction. Imagine your nearly completed dream home gets damaged by a fire. Builder's risk coverage steps in to handle the repairs. Defensive driving. Defensive driving involves strategies to prevent accidents, often leading to discounted insurance premiums. Taking a defensive driving course might get you a discount and save you from that person who always cuts into your lane. Direct losses. Direct losses refer to damages to property or possessions caused by an insured peril. For example, your kitchen burns down in a fire. The ruined appliances are a direct loss. Absolute liability. Absolute liability applies in situations where someone is held responsible for damages or injuries regardless of fault or intent. True story. My brother had a pet raccoon. He had the raccoon in his car, stopped by the store, and when he came out, a lady wanted to pet his raccoon. He allowed her. The raccoon bit the lady. He is absolutely liable. Accident. An accident is an unexpected, unintentional event causing injury or damage. Imagine spilling coffee on your laptop. That would be an accident. Or a car skidding on black ice crashes into a guardrail, causing vehicle damage or injuries. That would be an accident. At fault. At fault refers to cause to others in an accident where you're at fault. If you accidentally bump someone with your car in a parking lot and they need medical care, bodily injury liability helps cover their expenses. Civil liability. Civil liability refers to legal responsibilities for damages caused to others in non-criminal matters. If you accidentally flood your downstairs neighbor's apartment, you could face civil liability for the damages. Defamation involves making false statements about someone that harms their reputation. For example, a business owner sues a competitor who has spread false and damaging claims about their product's quality. Actual cash value, ACV. Actual cash value is the value of insured property factoring in its depreciation over time. After a house fire, your 5-year-old couch gets damaged. The insurer pays for its worth, its current worth, not the price you originally paid. If the original price was $1,200, the actual cash value was $400, the insurer would pay the $400. Agreed value. Agreed value is a preset amount determined between the insured and insurer without considering depreciation. For example, you insure your vintage car for $50,000. If it's totaled, you get exactly $50,000. No haggling. Aggregate limit. The maximum amount an insurer will pay for claims within a policy period. If your liability policy has a $1 million aggregate limit and you caused 2 $600,000 accidents, the second claim gets reduced to $400,000. Appraisal. An appraisal is the valuation of property by a qualified professional. Before insuring your diamond ring, your insurer requires an appraisal to determine its worth. Blanket insurance. Blanket insurance covers multiple items or locations under a single policy. Imagine you own a chain of coffee shops. All are covered under one blanket policy. Burglary. Burglary involves unlawful entry with the intent to steal. Someone sneaks into your home while you're away and takes your laptop. This is burglary. Competitive auto repair parts. These are aftermarket parts not made by the original manufacturer, but used in repairs to lower cost. Your damaged bumper gets replaced with a generic part instead of one from the car's brand. Competitive estimate. An estimate from multiple service providers to determine the best price for repairs or replacement. After storm damage, you get 3 quotes to fix your roof. Insurers often use the lowest one to settle your claim. Depreciation. Depreciation is the reduction in an item's value due to age, wear, or tear. It lowers the payout by reducing the item's value. For example, your 3-year-old phone that once cost you $1,000 is now worth peanuts, thanks to depreciation. Deductible. The deductible is the amount you pay out of pocket before your insurance kicks in. If your policy has a $500 deductible and your claim is for $2,000, the insurer only pays $1,500. Adhesion. A contract where one party, the insurer, sets all terms and the other party, the insured, can only accept or reject them. Insurance contract. You do not get to negotiate the terms, but you agree to them when you sign the paper. A formal change or addition to a policy terms. You add coverage for jewelry to your homeowner's policy through an amendment. Aleatory. A contract dependent on certain events or chances with unequal exchanges. You pay premiums for years without filing a claim, but one day your house burns down and the insurer covers a massive payout. Assignment. Transferring policy rights to another party, usually with insurer approval. If you have flood insurance and sell your insured home, you might assign the policy to the new owner. Binder. Temporary insurance coverage before the official policy is issued. You drive off the lot with a new car. Your binder provides coverage until your auto policy adds the vehicle to your policy. Cancellation. Terminating an insurance policy before its expiration date. You cancel your policy because you switched insurers. Claim made policy. Coverage applies to claims made during the policy period, regardless of when the event occurred. A professional liability policy covers a lawsuit filed today for a mistake you made 2 years ago. Class rating. Grouping individuals with similar risk profiles to determine their insurance rates. Teen drivers often share higher auto rates due to their age group's accidental risk. Coinsurance clause. A policy provision requiring the insured to share a percentage of the loss. Your health insurance has a 20% coinsurance clause. You pay $200 out of pocket for a $1,000 hospital bill. Conditional contract. A contract where certain conditions must be met for coverage to apply. Your life insurance policy requires you to pay premiums on time to keep coverage active. Coverage form. The part of a policy detailing what risks are insured. A coverage form specifies that your auto policy protects against theft and vandalism. Condition form describes the policy's conditions, duties, and responsibilities of both parties. Your homeowner's policy condition form might require you to secure your home after damage to prevent further losses. Consideration. The exchange of value in a contract for insurance. The insured pays premiums and the insurer provides coverage. You pay $500 for an annual premium, and the insurer agrees to cover you for the year. Control business. Insurance sold primarily to benefit the agent, for example, family or employer, which may be limited by law. An agent focuses exclusively on selling policies to their family members. This could qualify as a control business. Declarations. The policy's front page summarizing key details like coverage, limits, and insured parties. For example, your auto policy's declarations page lists your name, car details, coverage types, and premium amounts. Additional coverage. Extra protection added to a basic insurance policy, usually for specific needs or risk. Adding earthquake coverage to your homeowner's insurance is a prime example of additional coverage. Additional insureds. Individuals or entities added to a policy who receive coverage under its terms. You add your business's partner to your liability insurance policy, making them an additional insured. Beneficiary. A person or entity designated to receive benefits from an insurance policy or financial plan. For example, you name your child as the beneficiary of your life insurance policy, ensuring they'll receive funds after your passing. Comprehensive coverage. Comprehensive coverage pays for damages to your car caused by non-collision events like theft, vandalism, or natural disasters. A rogue hailstorm dents your car. Comprehensive coverage takes care of the repairs. Customized vehicle. A vehicle modified beyond factory specifications, often requiring special coverage. For example, you trick out your car with flashy rims and a turbocharger. Standard auto insurance may not cover these customizations. Actuary, a professional who analyzes financial risk using math, statistics, and financial theory to design and price insurance policies. Think of actuaries as insurance mathematicians. They figure out how much your premium should be based on how risky you seem. They work with underwriters to develop rating guidelines and ensure the premiums reflect the actual risk. Adjuster, the person who investigates and settles insurance claims on behalf of the insurer. Your car gets rear-ended and an adjuster visits to assess the damage and determine how much the insurer will pay. Agent, a licensed professional who sells insurance policies and represents either one or multiple insurers. You are the friendly neighborhood insurance agent helper. You help customers pick the perfect homeowner's policy. Adverse carrier, the insurance company of the opposing party in a claim or lawsuit. If you're in a car accident that wasn't your fault, the other driver's insurer is the adverse carrier. Assured, another term for the insured, the person or entity covered under an insurance policy. You're the assured on the life insurance policy. That is the lucky one who is covered. Bailee, a person or business entrusted with someone else's property for safekeeping or repair. A dry cleaner is a bailee because they hold on to your clothes until the job is done. Carrier, an insurance company that underwrites and issues insurance policies. If you have auto insurance through ABC Insurance Company, they are your carrier. Claimant, the person who files a claim for benefits or reimbursement under an insurance policy. After your luggage gets lost on a trip, you become a claimant by filing a claim with your travel insurer. Claim examiner, a professional who reviews insurance claims to ensure they meet policy terms and conditions. The claim examiner verifies your medical claim to ensure it aligns with your health plan's coverage. Commissioner, the head of a state's insurance department, responsible for regulating the insurance industry. The commissioner ensures that insurance companies in their state follow laws and protect policyholders. Defense counsel. Defense counsel, an attorney hired to defend an insured or insurer against a claim or lawsuit. If someone sues you for injuries from a slip and fall at your home, the defense counsel defends you in court. Domestic insurer, an insurance company that operates in the state where it is incorporated. XYZ Insurance Company, Incorporated in Virginia, is a domestic insurer for policyholders in Virginia. Admitted insurer, an insurance company authorized and licensed to operate within a particular state. If Sunny Day Insurance is licensed in Virginia, it's an admitted insurer there. Authorized insurer, another term for an admitted insurer, one that has the legal go-ahead to sell insurance in a state. An authorized insurer in Florida must meet Florida's licensing requirements. Alien insurer, an insurance company incorporated in a country outside the United States but operating within the U.S. A Canadian insurance company selling policies in the U.S. is an alien insurer. Apparent authority, when an agent appears to have the authority to act on behalf of the insurer, even if it's not explicitly granted. A customer assumes an agent can approve discounts because of their behavior, even if the agent lacks that power. Attorney General, the top legal officer of a state or country, often involved in enforcing insurance laws and addressing violations. If an insurer engages in fraudulent practices, the Attorney General may step in and investigate. Cease and desist, a legal order requiring a party to stop an illegal or questionable activity. If an insurer operates without a license, the state's commissioner might issue a cease and desist. Certificate of authority, a document issued by a state allowing an insurer to operate there legally. A life insurance company wants to sell policies in California. Before it can begin operations, it must obtain a certificate of authority from the California Department of Insurance. The certificate verifies the company has met the state's legal and financial requirements and is authorized to do business there. Certificate of insurance, a document that summarizes the coverage provided by an insurance policy. When renting a venue, the owner might request your certificate of insurance, or sometimes called a COI, to confirm liability coverage. Domicile of insurer, the location where an insurance company is incorporated or has its legal home. An insurer incorporated in California has California as its domicile. Arbitration, a method of dispute resolution where a neutral third party decides the outcome, often as an alternative to court. Two parties disagree on an insurance claim payout, so they turn to arbitration instead of filing a lawsuit. Abandonment, when an insurer gives up their damaged property to the insurer, expecting them to take responsibility. If you abandon your storm-damaged car at the repair shop and expect your insurer to take over, they can deny this unless stated in the policy. Claim, a formal request for payment made by an insured to their insurer after a loss or event covered by the policy. Filing a claim to your auto insurer after a fender bender is a classic example. Certificate of satisfaction, a document acknowledging that a claim or dispute has been settled and all obligations have been met. After your insurer reimburses your medical bills, you might sign a certificate of satisfaction confirming the claim has been resolved. Consumer reports, detailed reports about an individual's credit, employment, and insurance history, often used by insurers to assess risk. Your auto insurer might check your credit-based insurance score via a consumer report before setting your premium. Contract, a legally binding agreement between two parties. Your homeowner's policy is a contract where you pay premiums and the insurer promises to cover certain risks. Disclosure, providing an essential and truthful information often required during the insurance application process. Disclosing your health history accurately when applying for life insurance ensures the insurer can assess your risk properly. Deposit premium audit, A review of the insured's actual exposure, like payroll or sales, compared to the initial estimated premium, often done for adjustable policies. You estimate your business's annual payroll at $500,000, but after a premium audit, it turns out to be $600,000, leading to an adjusted premium. Claim examiner, a professional who reviews insurance claims to ensure they meet policy terms and conditions. The claim examiner verifies your medical claim to ensure it aligns with your health plan's coverage. Commissioner, the head of a state's insurance department, responsible for regulating the insurance industry. The commissioner ensures that insurance companies in their state follow laws and protect policyholders. Defense counsel. Defense counsel. An attorney hired to defend an insured or insurer against a claim or lawsuit. If someone sues you for injuries from a slip and fall at your home, the defense counsel defends you in court. Today is a new day. I'm super excited to share the testing tools that helped me succeed, gave me confidence, and will empower you to reach your goals.